add the additional 3-4%, instead of $1,000, my returns are going to be $1,500, right? 1,500 or 1,300, whatever it is, right? The returns are going to be much higher. How's it going, everybody? It is Dennis, and we're back with another video. And today we're going to be talking about a new strategy that I'm going to be playing on the option wheel strategy that I already do. If you guys have not watched my previous video on the option wheel strategy that I run, and if you want to watch that first before you get into this, it's going to be here in the top right. Of course, I'm gonna just do a quick rundown before we get into it. But if you guys want to understand how option wheel strategies work, what stocks I run, and why I run them, then you could go ahead and watch the video up here. Now, of course, if you have watched that video or you know how option wheel strategies work, let's go ahead and get straight into it. Before, of course, that the stocks I run is RIOT Platforms and Marathon Digital. Those are the two stocks I run for my option wheel strategy. The reason I run them is because RIOT has a 101.852 week average and it stays around that mark, and Marathon Digital or MARA has 115.552 week average, meaning high premiums. So now that you know that why I run those strategies, also I love being as showing all my information, being as blatant and like as open as possible. I have many contracts and I run this strategy. I wouldn't be telling you to do things if I didn't do it myself. So of course I have two contracts, 2 put contracts on RIOT. I have 9 call contracts on RIOT as well, a 16 and 17, and then I have 2 put contracts on MARA. My portfolio diversity on RIOT is 30.35, and MARA, of course, I don't hold actual shares, so there's no portfolio diversity, but there's 2 contracts, so I have a good amount of in my capital in there as well. So what am I changing with my strategy? Well, I'm not changing the covered call part of it. As you guys might or might not know, option wheel strategy, you sell put options. If you get assigned, you sell covered calls. If you get assigned, you sell put options. It's a big circle. If you don't get assigned on your sell put options, you sell more put options. If you don't get assigned on your covered calls, then you go ahead and sell more covered calls and rinse repeat, right? So what am I changing? I am changing this part right here, the sell put option part and the sign part. I'm changing that area right there. I am not touching my covered call strategy area. The reason I'm not touching the covered call area is because RIOT goes up 5 to 10% a week, and I will continue trading on a weekly basis for covered calls. My 9 contracts on covered calls, I will continue to trade weekly. I will not trade the monthly, which is what I am now doing with puts. And I'm not only trading the monthly. That is not why I made this whole video, just to tell you, oh, hey guys, I'm trading on a monthly basis. No, that's not the whole strategy. But that it is one part of the strategy that I am changing. My puts now, so these 2 contracts with RIOT and 2 contracts on MARA, I am now trading on a monthly basis. The reason being is because RIOT and MARA are going up 5 to 10% a week. I cannot keep up with that. Nobody could keep up with that. The only way for you to keep up with that growth, to the 5-10% growth, is if you're doing contracts up here. If you're doing contracts above the strike price or close to the strike price, and your delta for that is very high, and your chance of profit is very high. Of course, RIOT and MARA are skyrocketing, but then you could get moments like this where it crashes and it stays like that for a couple days, and say your expiration date is in this time frame, you lose, right? Of course, it might go back up, and you probably will go back up because Bitcoin is skyrocketing. S&P 500 is skyrocketing because we're bullish now, and we've just got knowledge from Jerome Powell that they're going to be cutting rates earlier than we thought. So everything's bullish, everyone's bullish, everything's going up. But you still need to play conservatively, because you still want to make your income, and you don't want to end up losing in the long run, right? You can make a lot of income, and as soon as you take that little bit of risk, as soon as you take that contract that's out of the money or close to the strike price or over the strike price, and say you take that, you get assigned, and you're like, okay, I'll sell covered calls, right? I'll sell covered calls, and you're gonna do that. What happens if it drops? What happens out of nowhere? There's a sell-off, it drops, and now that's it. Now you're holding the bet, right? So we still need to take some some percentage of risk tolerance and know where your risk is, right? We need to understand that part. So what is changing my strategy besides the monthly trades now that I'm going to be doing with puts? Well, I'm going to be doing monthly once again because I'm going to be locking in my price for my contract. I cannot keep up the 5-10% growth that RIOT and MARA are doing. If I'm getting 3%, if I'm getting 2-3% return per week on my contracts, I can't keep up a 5-10%. It's just math, right? If I'm getting back 20 bucks, 30 bucks, I can't give up another 50 to roll up my contract because I only made 20, 30, right? That means I have to get capital from an outside source to then fund it to keep going higher. Then you're not really winning in the long run, right? You're just continually funding your contracts up and up and up to what? You get 3% return, but then you have to give an additional 5-10% to keep up. It doesn't really work. So therefore, I'll be doing monthly. The reason I'm doing monthly is to lock in my position. As you can see, I locked in my $14 contract until the end of the month. The reason I locked it in is because now I don't have to roll it next week. I don't have to roll it the week after. I get my premium. I got it. It's in my pocket. And I just sit and wait. And if say RIOT goes up, whatever, then I'll take the 2 contracts and turn them into 1. But, at least I don't have to trade on a weekly basis and go up, 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 up. But I also have a second part to that strategy. And what is the second part? You might be asking. Well, if we're getting 3% returns every week, 2 to 3%, it's mostly to 2%. 2% return every week, that's 8% a month. That 8% is not enough to, of course, as you can see, keep up with the 60% growth. End of the day, you're gonna end up with less contracts than you had when you started. Right now, that's what it is right now with RIOT and MARA, right? But I'm gonna be increasing my returns, and you might be asking, how are you gonna increase your returns, Dennis? How are you gonna do it? Well, we're gonna be increasing our returns by 3 to 4% with something called TSLY. And I know, everybody's gonna be like, oh, that's such a stupid decision. You're gonna put the cash you earn into TSLY. It's gonna lose its value. You're not gonna make as much money as you think. It's a waste of money, whatever, blah, 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 right? Well, that 8% that I'm gonna make like that, right? So if we look at RIOT, we're gonna do a real quick rundown right now. We look at RIOT, say I took a monthly contract. Of course, I'm going to be taking in the beginning of every month, but this is just an example. If I took a monthly contract, we look at, so what I would do is, so we have this week. We take the weekly contract. I would take a 14.5 because under the 30 delta, you would get 28. I would go to the monthly, take that same contract. Of course, the delta is higher, and I'll get 113. So I get, boom, 113 is in my pocket. I profited 113. That contract is going to expire in a month. I don't care if it goes through, if it doesn't go through. That's the whole point of the option wheel strategy. But I got the $113. What I do with the $113? Put that into TSLY. Since we're going to be doing this in the beginning of every month, and as we know with yield max ETFs, they've changed their declaration dates, the X date, they changed it all, right? Now, they're going to declare it, they're going to pay out the dividend all in the same close time frame. Instead of it happening at 1 week and then you get paid out then the whole next week after, now everything's gonna be in the same week or roughly around the same week, right? Depending on how the days add up, right? Being the reason for why now I could take that $110, $113 I earned, put it into TSLY before the declaration date, make my 3 to 4%, and then I would go ahead and get my payout on the 9th. Or even better, instead of taking that payout on declaration date, then I could put it in on ex-dividend date when it drops to the buy price of the declaration. Depending on how I want to play that out, it's going to be 50-50. And sometimes I may take it on ex-dividend date, sometimes I may take it on declaration date, depending on how I feel. But both strategies are pretty good. Here, you get a lower value, meaning better for you, or here you could get a dividend payout on the 9th. All right, meaning you're getting 3 to 4% return on addition to your 8% return, meaning you're getting 11 to 12% return monthly. Instead of getting a 70% to 80% return yearly, you're now getting 100 to 132% yearly. That's a great increase. And of course, it all plays on TSLY payouts it all plays on TSLY's ability to hold its value. But as we can see, when Yield Max ETFs does the right move, which they have this time around, they put a contract for $250, and it allows for that growth. We got that 3.83% of growth today. We got it today, right? And if they keep up with those contracts that are 5% out of the money, right, they're 5% from the strike price, we get that 5% growth ability, right? So as we can see, we've been growing, and it's possible to do. So of course, it all plays out on many things, right? There's a lot of risk that goes into it. You're playing on TSLY and Yield Max ETFs, doing the right moves and paying out the same amount. And you're playing on RIOT, staying around the same amount. It's a lot of things that come into play, but it brings more yield, right? It's better than holding it in cash and then putting it back into the contract to then get the same amount of cash and then put it back in the contract, and you're doing the rinse, repeat, right? You're doing it over and over and over just to have no cash at the end of the day in your pocket that you could possibly use. As well as, people are saying, well, you're growing your portfolio. Yes, I'm growing my portfolio, but I could be growing it faster. Now, how am I going to be growing faster? No. Not the 3-4% that I'll be making from TSLY. Additionally, there's another way you could grow faster. And I say this all the time, margin could be used for good debt. Margin is good debt if used correctly. And that is another part of the strategy that I'll be using. The third and final step, margin. As we can see, if we look at RIOT, your initial requirement and your maintenance requirement, this is the big one, the maintenance is 70%. 70%. This means I could use, if I invest in RIOT, and when you get a contract in RIOT, you have that maintenance requirement. You are cutting your margin ability by 70%. Unlike TSLY, which if we take the cash we earn just from puts, this is not from covered calls, just from puts, and we put it to TSLY, 25% maintenance. Meaning, if I invest my 100 into TSLY, I have more margin I could use. If I invest into RIOT, I have less margin I could use. Meaning, I could leverage the cash I put on TSLY or TSLY more than I would do on RIOT. Meaning, say I put 100 in, I leverage 50, put it back into TSLY. I just made myself, instead of on the $100 making 4%, I made 3-4% on $150. Unlike RIOT, where if I put 100 in, I can't take 50 out because maintenance requirement is 70. So the only amount I could pretty much take is instead of 150, I take out 110, 120, and then I can't put it back into RIOT because now I have to wait for the money to add back up. So, and if I do put it into RIOT, then it cuts my margin even more. So that is why I am playing for TSLY, because right now my returns for RIOT and MARA for this month are going to be $1,000, right? $1,000 something, right? That's, close to there. Now, for next month, add the additional 3-4%. Instead of $1,000, my returns are going to be $1,500, right? $1,500 or $1,300, whatever it is, right? The returns are going to be much higher, right? You know why? Because I'm going to put more value into TSLY. I'm going to get my 3 to 4% return on the dividends, as well as putting more margin in, which is not my money technically. It's technically not my money, which will then give me another 3-4%. I'm just saying. That is my strategy that I'm going to be changing up. Is it risky? Yes, it is risky. Everything is risky in stocks. But will it pay a higher amount than just keeping cash around from the puts and doing weekly strategies and having to roll just to have no cash at the end of the day? Yeah, it is better than that. It is way better than that. Because I have more margin to use, not only for investing, but using say I want to buy myself something, right? I want to go use the margin for myself. I have more margin to use. I have less maintenance to worry about. That meaning I have less risk in the long run, because if I'm not investing to risky RIOT and say the market ends up dipping and then I have to pay my margin off, I have less to pay if I have in TSLY rather than in RIOT, because RIOT will demand me to pay earlier than if I had my money in TSLY. But that's a whole different thing. That's margin, and I still need to make a video about margin because there's a lot to that. But that is my strategy going into RIOT for the new strategy for option wheel strategy. A lot of strategies right there. Yeah, there's a tongue twister right there. But yeah, no more weekly trades, only monthly. When I do the monthly trades, the premium I take will go straight into TSLY, which will pay me 3 to 4%. And then on that, I will also take margin and put it into TSLY, which will pay me an additional on that 3-4%. So that is that. That is the video. That is the new strategy for RIOT platforms and MARA digital and all that stuff. That is the new strategy for the option wheel strategy. Hope you guys learned something. Maybe you guys even try it. I don't know. It's up to you guys. Maybe you guys decide to try it. Maybe you guys decide to take that risk. It's a high risk, but high reward, especially in this bullish market. I would say it's a risk that's you're good to take on the bullish market. So yeah, that has been me. Thank you so much, everybody, for watching. That is my new strategy for the RIOT and MARA and the option wheel strategy. And I'll see you guys in the next video. And also, we'll have an update. Don't worry, we'll have an update on how the strategy is going in the next month. So I'll see you guys then. Bye.